Japan are practically the only country in the developed world that haven't begun to tighten their central bank policies and to increase interest rates. But recently, markets have been speculating that that is about to change, which has led to considerable volatility and investor speculation. Guillaume, welcome. Great to have you on this week. And I'm hoping you can shed some light on what's going on in Japan.
Hi, sure, Peter. I can try. As you said, the Bank of Japan is still running extremely accommodative monetary policy. If you look at interest rates, they're currently still negative at minus 10 basis points. They've been controlling their bond markets for years, so it means that they've been buying bonds to cap yield. For example, 10-year bonds at 50 basis points currently is the max level for yield that the Bank of Japan would allow, which is known as yield curve control, or YCC for short. And currently, we've got inflation in Japan running close to 4%. So there's definitely ample room for normalization of those policies. And that's what investment markets are betting on at the moment, that the Bank of Japan will have to start this process sooner rather than later. And obviously, it's an important change, and that speculation has led to sort of volatility. We've seen some wild swings in the Japanese yen, the price of Japanese government bonds, and that's had an impact on the Japanese stock market as well. That's underperformed a bit recently. So lots going on in Japan at the moment.
Okay, so I find this really interesting. Is Japan was like the poster boy of economic growth and expansion in the 1980s. Some of its companies were the largest in the world, like Toyota, Sony, Panasonic, Sharp. And yet over the past number of years, it's kind of been this period of pretty much anemic growth, trying hard to stimulate its economy.
Yes, Japan went through a massive boom in the 80s, So in 1989, 32 of the 50 largest companies in the world were Japanese. As of today, we only got one left, which is Toyota. Wow. So you had that massive boom, and then you had that massive bust. Interest rate went up, and people got exuberant. There was a property boom, so effectively, stock market crashed, and it left banks with mountains of bad debts, which took years to kind of clear out. So really, since then, Japan hasn't really been able to get its economy started again. And admittedly, there's structural factors at play here, poor demographics, there's global competition as well. But still, we've been through a few lost decades now for Japan.
I think that the fact that the stat you came out with saying just one company in the top 50 now compared to 32 back in 1989 is incredible. I suppose, though, we should ask, what are they doing, and have they been doing to try and rectify this?
So they've been sort of applying the sort of same recipe, which is running a large fiscal deficit from the government, trying to stimulate the economy, but it seemed to have had little effect, to be honest, except from building a huge sort of debt burden. Debt in Japanese government debt is 240% of GDP, which is kind of one of the world records. So fiscal deficit, high debt, and at the same time, very loose monetary policy to try and stimulate the economy by effectively guaranteeing low interest rates for investors to try and kickstart things effectively.
Okay, so this is the part where I put you on the spot. You love this. It's view time. What do you think will happen, Guillaume?
Well, we think it's not a matter of if they're going to remove YCC and start raising interest rates. It's more a matter of when, because for us the direction of travel is clearly positive for the economy. You might have to wait for the Bank of Japan Governor Kuroda, who is retiring in March. And he was the architect of that YCC policy. So maybe after that it's going to be easier to change things. But what it means effectively is that reversing those financial conditions for Japan means less support for Japanese equities. They did very well last year, supported by a weaker Japanese yen. That's going to turn, and also I guess the impact on government bonds could be important, because Japanese investors have been buying overseas bonds, chasing higher yields outside of Japan for decades. So moving this money back into Japan, buying those bonds for Japanese investors from the Bank of Japan, that could be a source of market volatility as well.
Okay, Guillaume, time's up, I'm afraid. So thank you so much for helping shed some light on kind of what is it's a pretty tricky topic to get your head around. This isn't going to be the end of this story, I'm sure. And let's hope I suppose Japan can move on from what you spoke about as those lost decades. We'll be back again next week with another topic that's caught our eye. Thanks.